in context and perspective, let me bring on board Gurmeet Chadha, Managing Partner and Fund Manager at Complete Circle Consultants, joining us this afternoon. Gurmeet, great day to have you to kind of contextualize this, put this into perspective. And you know, long overdue in terms of a conversation with you. So thanks so much for joining in on such a critical day. Give us a sense. How are you reading through both the letter itself, and if you can just spell it out on how you read the letter, and second, the commentary coming post the letter?
So, I think the timing is pretty bad considering what is happening globally. And I'm of the firm believer. It's like you say whatever happens on the cricket pitch should remain on the cricket pitch, right? Similarly, whatever happens between the board and the management should remain in the boardroom, and probably could have been addressed a little better. But I think timely replacement of Mr. Mistry and clarification on the early morning call at least is reassuring that there are no material issues. I think the issues are more related to ideology and view on certain things. My discussion with some of the leadership team members have been there is some disconnect on execution of few issues between board and the leadership, and I think that it has got to do more with that rather than the. But obviously, it creates a letter can wipe off 1 lakh crore of market cap. But I think asset quality of HDFC, even in bad credit cycles, 2008, Demon, COVID, 2018-19 NBFC crisis has been one of the better. So I don't see any issues as far as liability gathering is concerned or asset quality is concerned. The current issue hopefully should get resolved over a period of time. And also HDFC, I think the communication has to be a little better. I think they have had few issues on tech, on some senior leadership leaving, some issues here and there. So it's been a combination. But the current valuation hers is what 1.8, 1.9 times FY28 book. It trades at about 12-13 times earnings. So I think from a price point of view, because it's underperformed so much in the past, maybe the incremental damage is less. But how long it takes in terms of coming back is a function of how soon the new person and things get smoothed out.
I understand, Gurmeet. I understand. But you spoke about how everything that happens on the cricket pitch should stay on the cricket pitch. That clearly hasn't happened with the largest bank in terms of market cap in India. It clearly hasn't happened. What do you think has caused this? Because there has to be some concern which could have caused, I mean, it's difficult to believe that Mr. Chakraborty is not well aware of that. He's head of one of the largest banks in the country, and therefore what happens on the cricket pitch should stay on the cricket pitch, and if he wants to leave it, he should leave it in a better manner. I'm sure he knows that. What's caused this? Isn't this at all a cause of concern, Gurmeet, to you?
See, I mean, there are a lot of, I don't want to speculate, but basis, as I said, my discussion with some old ex-colleagues is one is got to do with, the merger execution not happening because that happened in his tenure. It's not done in terms of execution as well as it should have. I think there were also talks of at some point of time MUFG showing interest in HDB, and finally I think they're going to Shriram. So there's some issues there, but as I said, there is no definitive answers. I think only the management should answer, and I think they should come out. I think whatever are the differences, also a good bank, a good corporate entity should spell that out and spell out, what has been done and what was the reason for some of the differing ideologies or viewpoints. I think that should happen. Although, as I said, with KK Mistry coming and RBI also reassuring that there are material issues, I think from a point of view of a liquidity issue with the bank or a run on the bank or any asset quality, those are taken care of. But purely from a investment point of view, stakeholder interest point of view, and the fact that it's the largest bank, in India, in private sector bank, systemically important bank, I think more clarity should come, and that's where I think the management needs to probably be more proactive in communication.
It's not happened, is what you're saying, Gurmeet. That's not happened yet. right?
Yeah, no, it hasn't happened. It hasn't happened, and I
Sure.
think there's been a bit of a gap. I think even during mergers and all, I think the way, sorry for comparing it, but during Mr. Aditya Puri's time, the bank was a lot more proactive, assertive, in terms of, in different cycles. Somehow, I think there's been a bit of a, maybe it's too big a shoes to fill, but there has been a bit of a gap even in terms of communication and the management also on tech issues. I think it has been very reactive. And RBI has come down on them on tech issues on and off, on credit card issues, for some point of time. So I think at some point of time, being a leader, and that's what you get a multiple for the leadership you take, not only in terms of the performance, operating metrics, also in terms of your governance standards. Now, if that comes under a bit of a cloud, then obviously there will be a derating, which is what has happened with the bank.
Brilliant. Okay, so you've given us the next leg of discussion. In terms of commentary, when you're looking at the commentary starting 2022, 2023, leadership was the same, largely. And with regard to that commentary, we've not seen that commentary translate into real-world numbers. Every time we've fallen a bit short across metrics. It's not just one metric where we've fallen short. Across metrics, we've fallen short. Is that why we've seen a large derating? Is that what you believe has caused the large derating? And do you therefore believe that at 2 times book, one needs to be cautious or one needs to be extremely bullish when it comes to an HDFC Bank?
No, I don't think they've missed numbers by a very big margin, but the way merger was expected to create synergies, obviously it hasn't. Also, there have been issues on LDR and liquidity issues post merger because they inherited a lot of high cost deposits of HDFC Limited. So obviously that hasn't played out. But as I said, if you get 4 or 5 times price to book, which they used to get, you used to also grow the book at 20%, maintaining asset quality. Now, if that's not happened, and you have other peers doing exactly the same and at much lower valuation, they have caught up. So Axis has caught up, ICICI has caught up, PSU banks have caught up. So if the growth profile is same, asset quality is same, liability mix is same, the market will not give you a disproportionate multiple, which it used to earlier. And this is what has happened also with Kotak, not just with SDFC, for completely different set of reasons. So I'm not, as I said, current price of point, I don't see much price damage, although anything can happen in the market. But maybe from an incremental allocation point of view, market at this juncture, considering the sentiment, may want to look at other banks like ICICI, Axis, which are also down 14-15% from the peak.
Gurmeet, I wonder if a lot of this starts to occupy management bandwidth, because that kind of defocuses the management from doing its job to trying to firefight. And we've seen this in the past, in the last 3 years. Unfortunately, in the Indian landscape, we've seen enough cases where management bandwidth is occupied to start firefighting things. The whistleblower complaints that have come with regard to HDFC, the market has largely ignored them for a very long period of time. So these two factors, do you believe it will weigh down the HDFC performance? Likely?
Unlikely, because if you see today's call also, they said that whatever guidance and profitability will have no impact. Operating metrics continue to be strong. So I don't see much impact there. This is more, as I said, between the board and leadership, and I'm sure they will come around. So I don't see that as a concern. And overall bank credit growth has been pretty solid. At a banking system level, we are seeing 13-14% growth. M3 supply has expanded. But as I said, the bank has had some issues on attrition also at the lower end, especially the mid management. And I think that on that metric, probably they need to work on. And I think with RBI pressure now on focusing on core banking versus focusing on third-party products, also we'll see a bit of a balance and focus coming back to CASA, core banking products versus third-party products. I think that transition you will see. I don't see otherwise any stress as far as number underperformance or profitability metrics goes.
Gurmeet, last piece. With regard to markets themselves, we've entered into a bout of pessimism, right? And overall, just shifting focus entirely from HDFC. Do you believe it's a good opportunity to buy, or the fact that the global macro is looking gloomy and with all the conflicts that's playing out, there's an uncertainty to it? Should one play wait and watch?
I think you could take a bit of a two two-pronged approach. One prong is pockets impacted by the conflict, which have very low correlation. Like, for example, telecom or defense. Today, the defense index is down 3%. All stocks have corrected. Pharma, little bit banks. Banks eventually, all problems eventually will come to the bank balance sheet at some point of time if conflict, goes beyond a point. But pockets which have low correlation, you can start adding a little bit in a staggered manner. As I said, telecom, pharma, defense, energy in terms of, upstream and refiners. Pockets which are more impacted, which are the export sectors, crude sensitive, because hydrocarbon is a base for everything. So working capital goes up, inventory level goes up, cost of inventory goes up. Eventually, it will impact corporate profitability also. Those pockets you can slightly maybe just wait out the conflict to end. So have a staggered approach, continue your SIPs and monthly accumulation. Maybe a few months down the line, we may reflect back and see this as an opportunity. But because it's in a war and nobody can predict and the situation is very fluid, going granularly and in a staggered manner makes more sense. And in case you don't have the courage, sometimes not doing anything is also a good thing to do.
Okay, not doing anything is fine. Okay, Gurmeet, thank you so much for coming in this afternoon and speaking with us. It's been a very engaging conversation.
Thank you so much, sir.
Right, and viewers, what we'll do is slip into a very short break post that conversation. Hopefully that contextualize things. And of course, Gurmeet himself giving a view with regard to HDFC. Well worth rewinding and having a listen to that view that he's given. But what we'll do is slip into a very short break and come back with more. Stay with us.